Anshul Saigal too joins in on the show right now. Anshul, hi, afternoon. Are you surprised by this move in the market, the kind of resilience that one has seen, and the fact that we've pretty much covered all of our losses from those April 2nd tariff announcements?
Afternoon, Aisha. Actually, when you saw the volatility in the markets, and then you compared it to the commentary that companies were giving, whether in private meetings or in meetings that they were doing for results calls, it was quite clear that there is a huge dichotomy in how the companies are viewing their future and how the markets are reacting to prices in terms of prices, that is. Of course, some of it was that the markets had over the last 2 years rallied a lot and they needed to consolidate a little bit, which happened. But usually, when this plays out, you see a over sort of shooting of downward trend in the markets, which we saw in the period November to say February of this November last year to February of this year. We believe that the uh, the strength on the ground of businesses is so robust that this was, if at all, a correction. It was a blip in a long-term trend, and that the long-term trend for these markets remain very robust. At the margin, our belief was that the tariffs also will be positive for India, and given that as well, the volatility, once it passes, people will realize that this is a great time to be buying India. And some of that we've seen in the last, say, 40, 45 days play out in the markets. We believe that there is still a lot of value in the markets, value in terms of growth that is not priced in. And there is money to be made over the next 1 to 2 years if you pick the right pockets in this market.
Right, that's true. But Anshul, I wanted to get your view on the fact that now, the fact that we are seeing so much of uncertainty when you talk about the tariff and the fact that you've seen this recovery in the markets, at least it giving some hope to a lot of them. But where do you think the hope actually lies to make money going ahead when you talk about the sectors?
Hi. Yes, you're right. There is a lot of uncertainty, but uncertainty gives you opportunity. You will not get opportunity in when things are certain because prices are really building in that certainty. If you look at the tariffs which you mentioned and uncertainty around that, let's look at one sector in particular and talk specifics. Let's look at the textile sector. Now, India caters to only say 12 to 15% of the total textile imports into the US in certain categories. In other categories, as low as 3 to 5%. And the major sort of importer into the US is China. Clearly, we've seen that if there is a relative impact which is much greater on China as compared to India on tariffs, then Indian exports into the US they become a more competitive. And just anecdotally, I'll tell you, label printing machines. I was speaking to someone the other day, and label printing machines. This gentleman used to get one sort of inquiry over a period of 3 to 4 months on these label printing machines in India. And in the last week, he's got four inquiries. That tells you something that even the manufacturers in the country are seeing that there is going to be significant demand uptick in textiles, and they're preparing for that. We believe that textiles and many such sectors where India is a fraction of global imports into the US, India will become the sort of more competitive, and the tariffs will be in the long term beneficial for India.
Very interesting, Anshul. I'm wondering if that's a listed player.
It isn't a listed player, Aisha. It is an unlisted company whom I was speaking with. But it was eye-opening because clearly there is tailwind in demand in a segment which is a high-value item and a very specific item for one industry.
Yeah, I thought as much, and quite intriguing, the kind of inquiries that one is getting for a minuscule part of their entire chain of Make in India. So who knows what kind of opportunity is it's going to throw up. But Anshul, other than that, where is it that you think there are opportunities in this market right now? Or rather, what is it that you would even avoid?
Yeah. Aisha, that's a very pertinent question, both on where we see opportunity and where we should be avoiding certain segments of the markets. Opportunity wise, you see what is going to happen as a result of the tariffs is that there is going to be inshoring of capacity into the US. Um, Similar sort of trends will be seen even in Europe. If you notice, Europe has, in many instances, increased their defense budgets from 2% of GDP to as high as 5%, which means requirement of manufacturing within Europe will go up. Now, if you take both these things together, first capacity, then manufacturing of even defense equipment and others, then demand for metals is likely to go up materially. And so companies that benefit both on account of volumes as also on account of prices, those companies which are trading at actually quite low valuations today because of the trend not being so positive in the last 2 years, those may be beneficiaries going forward. Now, you can play this through manufacturers of metals, or you can play this through distributors of metals. And there are many other opportunities in this space as well. But metals as a category, we think will be quite attractive. On the other hand, what the tariff situation has done is that it has created some sort of an uncertainty on capex in certain segments. Also spends on tech in certain segments. If you notice, the results of tech companies have been quite tepid. Their commentary has also been tepid. While valuations have, they've come off a little bit, but they're still very expensive. We believe that that is a segment we would take some time in getting into, and we would avoid that. Pharma, CDMO, that is another segment which looks very interesting in the context of how small India is, 3 to 4% of global supplies, while China is far head and shoulders ahead of India, as high as maybe 50, 60%. That could be a transfer to India over a period of time. These are some segments where we see opportunity.
All right, so those are some of the sectors or the spots that actually Anshul is finding pretty attractive right now and sees opportunities going ahead. Akshay, let me come to you because it looks like this week auto counters will be able to snap that 3-week losing streak, and this on back of the news flow. So that's supportive globally. Also back home, you can see that trickle-down effect is the fact that Trump is mulling some tariff exemptions. But on the charts, how is the auto space looking to you? Because over the last 3 weeks, it's fallen in excess of about 5%.
Yeah, so auto sector has been at the receiving end, but if you look at the price structure in the last few trading sessions, there have been some recovery or possible short-term bottoming out scenarios in majority of the stocks. So the stocks which I like technically in this sector first would be Ashok Leyland, which has been pretty resilient in the last few trading sessions. 200 is a strong base which this stock has set up, and now it is time that the momentum gets back strongly in this stock. So right now 230, 235 can be the upside you can work with in Ashok Leyland. 200 is the support below which you can keep your stop losses. And Bajaj Auto is more of a bottom fishing candidate where a possible double bottom is in the making. 7,500 support is possibly being sealed, and the stock is setting up for targets of 8,500 plus. So right now, these are the two stocks which look promising on technical price chart perspective. So Bajaj Auto and Ashok Leyland will be my top bets in the auto space.
Okay, Bajaj Auto, Ashok Leyland, but it's a long weekend. While, of course, most global markets are also going to have a trading holiday, much unlike the previous two trading holidays that we got on account of course, Good Friday. But there'll be a lot of news flow as well. And Snehi is here to tell us about all the cues that we're going to wake up to on Monday morning. Snehi?
Well, absolutely. We're heading into a long weekend, and markets back home as well as globally are also going to be reacting to some pent-up news over the course of weekend, because while our markets are closed tomorrow, major global markets are also closed on Monday on account of Easter. So lots of news flow. But first, let's understand what we can expect to see on Monday morning. We are going to have earnings reactions coming in from a lot of Nifty 50 as well as broader market companies as well. Infosys first up is going to be important to watch out for. Poor set of numbers are expected from Infosys. Constant currency revenue expected to decline by 1% sequentially. Margins are also expected to drop by 80 bips. So Infosys earnings reaction is going to be important to watch out for on Monday. Other than that, over the course of the weekend, we also have HDFC Bank numbers coming out. Strong operational updates have already been given by the company. Good set of numbers is expected. A mild moderation in NIMs is something that we could expect to see. And remember that the stock has hit an all-time high in today's trade. So HDFC Bank important to watch out for. Similarly, you also have ICICI Bank numbers that will be coming out. They're likely to maintain their leadership position in return ratios and loan book growth among large private banks with stable NIMs, and we could also see slightly upward move in their NIMs. So looking very healthy for ICICI Bank, and the street is expecting some good numbers this time around. Remember, ICICI Bank has also hit its life high in today's trade. Yes Bank, another earnings to watch out for. Other than this, also watch out for Nifty Bank, very close to hitting its all-time high as well. So Nifty Bank will be important. Other than all of this, any commentary from US, China, from Trump, the Trump admin, as well as what Chinese officials have to say, will be key to watch out for. You have China's loan prime rates coming out over the weekend, so that is going to be important. And well, yes, lastly, also remember that some markets will be closed on Monday as well on account of Easter. Lots of cues to watch out for on Monday, and we can expect a day full of action on Monday.
Oh yes, it's going to be a busy week up ahead, so enjoy the long weekend is all that one can say, and especially with this kind of a handoff from the market. But Kunal, let's get in some BTST trades from you.
So I'll go with two buy calls. The first one is on ICICI Bank, continue to have the buy stance which I gave in the morning as well. Would look out for now a revised target of 1440. Traders could hold on to the long positions with a trailing stop loss of 1375. The second would be buy on Geo Finance. That's a chart which is looking extremely attractive. An inverted head and shoulder breakout for Geo Finance. So would look out for targets of 260, stop loss at 240.
Okay, that's the take coming in on what you're seeing from some of these, interesting stock ideas coming in over there. But in the meantime, Anshul, just wanted your suggestion or, take really on what we've heard from some of the IT bellwethers so far, both TCS as well as Wipro. And then, of course, there's Infi as well, due today in just a few hours from now. The reportage has been, extremely weak. The outlook is bleak. But do you think they make for good contra plays, considering the correction also has been very steep and very elongated in the entire IT pack?
Yeah, while the commentary has been weak, also the numbers and guidance has been quite weak for both the companies you mentioned. But TCS in particular made a very interesting comment. They said that they believe that ordering activity has not come to a standstill. It's only been deferred. They believe that the financial sector companies in the US, they are just deferring their decision because of the tariff uncertainty, but they are going to come back with gusto whenever this uncertainty kind of comes down. Because tech spending is on the top of all CEOs' minds. Now, given that at some point tech will become interesting, but I mean, for an individual investor like myself, it becomes not so attractive to look at this space for absolute returns when the sector is trading at 25, 30 times, despite the consolidation over so many quarters in a row. And while growth is 1, 2, say 4, 5%, I can find much better opportunities. I don't necessarily have to be in tech, and I can catch future trends which will make much greater absolute returns from here. So for me, it's not so much of a very attractive in a sense a sector, but for someone who's building a professional portfolio, clearly tech at some point will become interesting.
Okay, Anshul, so good having you on the show. Thanks as always for joining in. And what a momentous day it is.
12.
BSE, remember, turns out or rather turns 150, yes, you heard me right, 150 years of the recorded history of the Bombay Stock Exchange. And in fact, let's hear out what Mr. Ramamurthy is currently saying.
Financialization of household savings have increased from 27 to 39%. Currently, around 1,100 SMEs are listed in the stock exchanges in India, with BSE contributing around 570 listing. This is a very, very, very small number compared to the total number of SMEs, which are around 6 crores in this country. SME contributes in a significant way for economic development, job creation, exports, and therefore to GDP. Equity listing of SMEs goes a big way in augmenting banking by providing the risk capital and therefore enabling banks to provide quality working capital. We have to go a long way, and we will certainly work towards that. Under the leadership of Honorable Prime Minister Shri Narendra Modi ji, we are living in a golden era of Azadi Ki Amrit Kal, where we are marching towards Viksit Bharat and Atmanirbhar Bharat. Madam, with record 8 consecutive budgets, you have relentlessly been working for the cause of Indian economy and India Inc. With the continued development of our economy through growth-oriented policy formulation and robust regulatory setup, India will become a developed nation by 2047. There will be more than 1 billion Indians who will be in the earning age, contributing for this country's growth, consumption, production, savings, and investments. The role of Yuva and Nari, which our Honorable Finance Minister has close to her heart, is very important in this process. Madam, we at BSE stand committed to the market development and regulation. I shall continue to contribute by performing our role diligently and relentlessly. Under the able guidance of our regulators and policymakers, we will continue to play a pivotal role in taking India's capital markets to new heights domestically and beyond. This is a momentous occasion, and I once again thank the dignitaries on the dais and the other guests for honoring us by your presence here, and I welcome you all for the event ahead. Thank you and namaskar.
Thank you, Ramamurthy ji, for those inspiring words. And here is wishing you and Team BSE the very best as you propel BSE forward into the future. Ladies and gentlemen, now, in line with the age-old tradition at the Bombay Stock Exchange, may I request Ramamurthy ji to escort Honorable Minister Srimati Nirmala Sitharaman ji to inaugurate today's proceedings with the ringing of the gong. And ladies and gentlemen, maybe we can help them with some applause when the gong rings to commemorate this 150-year celebrations. And here we go. Thank you. We now have some special initiative launches to commemorate this historic occasion. Honorable Minister, it would be our privilege to...
Well, what a gong, and who better than the Finance Minister as well as the BSE MD and CEO to actually close in on a day like today. Just, shy of that all-time high on the Nifty Bank, unfortunately. But look at the market. When we walked into trade, it seemed like it's going to be one of those very somber days, but it's pretty much been a one-way move up that you've seen in the Nifty, a 400-point move, 23,800 here. The leadership names today have really been ICICI Bank, HDFC Bank, there's been Bharti, SBI jumped up a good 3%. Reliance held out by nearly about 3% in trade. Axis Bank looked very smart. The underperformers, of course, were largely from within the IT pack. Wipro reacted negatively to its numbers. That, in any case, was known. Infosys covered some amount of lost ground. L&T did not really pick up as much. And Tech HCL Technologies along with Unilever were also the pain points. The breadth of the market as well opened very nicely in favor of the advances. Be it a delivery, be it an ABB or a Zomato, all these stocks held out very, very smartly in trade. But Kunal, lots to happen in terms of news flow over the weekend. What do you foresee on Monday?
When markets go into a state of a calm, when you are expected to have so much of news flow and that last leg of uncertainty still around with respect to the global news flow around tariff, etc., and of course the domestic news flow regarding results, etc., this tells you that the markets have this shock absorption capacity. So in case if there is any kind of a negative news flow which happens for say a couple of stocks, say post results, then the markets would probably want to take it in its own stride and then move up, move on and look out for better opportunities. So I believe that that's a stage of the market which indicates that we are into a mature phase of the uptrend. This is the fourth gap which the index has been created, today after this kind of a strong up move, and that really tells you the picture that we are looking at not just a minor pickup of price action, but more of a ferocious V-shaped recovery.
Okay, a ferocious V-shaped recovery is what Kunal is betting for. But Kunal, we'll let you go on that note. And Akshay, thanks for your time as well.